Bad money can ruin a good deal faster than no money ever could. So before you sign anything, let's talk about the investors who smile at the closing table and haunt you every quarter after. The term sheet arrives and it looks clean, professional, maybe even flattering, but buried inside that document are clauses that can quietly transfer control, crush your returns, and leave you wondering how you ended up working for someone else in your own project. We've seen it happen to sharp people, experienced operators, people who read the document but didn't read between the lines. Think of a term sheet like a lease agreement, written by the landlord's lawyer. Every word is intentional, and the parts that benefit you are usually the shortest sentences. The parts that benefit them are the ones that take 3 readings and a Google search to understand. Here's the first red flag that almost nobody talks about: the investor who needs a decision by Friday. Urgency in a capital conversation is a manipulation tactic dressed up as opportunity, and any partner worth having understands that due diligence has no deadline. Preferred return waterfalls that stack in their favor. Cumulative preferred returns that accrue even when the deal is performing. Promoted interest structures with no alignment to actual work. These aren't standard terms, they're traps with footnotes. If you're nodding along without fully understanding each of those phrases, that's exactly what they're counting on. The second pattern is the investor who loves the deal until there's a problem, and then suddenly the operating agreement has a provision that puts them in control during any material adverse event. You built the deal, sourced the property, managed the contractor, and now a 2% variance in occupancy hands the steering wheel to someone who toured the building once over Zoom. Watch for what isn't in the document just as much as what is. Missing dispute resolution language, vague definitions of default, and no clear exit timeline are not oversights, they're open doors for future leverage. The behavioral red flag is subtler but equally dangerous. The investor who can't explain their own thesis. If someone is writing a check into your multifamily value add deal, but they think cap rates and interest rates move in the same direction, you're not getting a partner, you're getting a liability with a checkbook. History rhymes loudly here. The 1980s savings and loan crisis, the 2008 syndication blowups, the 2022 rate shock that exposed every deal underwritten at 4% permanent debt in every cycle. The deals that blew up had one thing in common: misaligned capital at the table. The structure was the weapon, not the market. Community wisdom from experienced operators will tell you the same thing in different words. Your worst day in a deal will reveal your investor's true character, and by then it's too late to renegotiate. Do the reference checks before the wire, not after. The misconception worth destroying right now is that all institutional-looking paperwork is legitimate. A beautifully formatted term sheet with a prestigious-sounding fund name is not due diligence, it is graphic design, and anyone with a Canva account and an LLC can produce one. The practical lesson is boring, but it works. Hire a real estate attorney to review every term sheet before you respond, not after you've emotionally committed to the capital. Negotiating from a position of "I haven't signed yet" costs you nothing. Negotiating from "I already told my contractor we're moving forward" costs you everything. Discipline in capital selection is the same as discipline in acquisition. The deal you don't take with the wrong partner is just as valuable as the deal you close with the right one. Size your risk, know your exit, and never let timeline pressure replace process. At the end of the day, the investors worth having are the ones who want the same thing you want: a clean structure, aligned incentives, and a handshake that holds up in year 3 when things get complicated. You don't need perfect capital, you need honest capital, and those are very different things. Whether you're looking for the right capital partners, navigating your first syndication, or just trying to protect yourself before you sign, we can help. Check out our links in the description below for real estate investing support, home contracting work, and trusted lender connections.